Hey guys, this is Nick from forexswims.com with a live trade video. Today is Thursday the 12th of July 2012 and the time is 21:21 GMT plus 1. You're looking at an AUD USD 4-hour chart and I'm looking to trade a bullish reversal setup here. So we have a nice strong bearish preceding trend here. We have indecision here forming on top of an area of support, and we have what looks like the beginning of a reversal trend. Now, I'm a little bit lucky with this trade because my entry has already been triggered a while ago, but I wasn't able to access my chart, so I wasn't able to get in. But the good thing is that price has actually retraced a little bit. So now I'm able to get in at a better price than I would have gotten in originally. My original entry was the psychological level at the 1.0150. Now, I wanted to enter this psychological level because psychological levels provide support and resistance, in this case resistance, and if the bulls were able to break this psychological level, it would indicate to me that they are in control of the market, that they have power. The bulls broke it, it retraced a little bit, which is quite normal from resistance. Usually when it's broken, it does retrace a little bit, which was great for me because now I'm going to enter around about the 1.0140, 10 pips earlier than I would have entered had I got in as soon as that cycle level broke. So I'm going to jump into this trade right now. Okay, I'm in the market, and in the next part of this video I'm going to discuss targets and stops. Okay, I'll start off with targets because targets are straightforward on this trade. My first target's up here at the 1.0200. The reason my target is up here is because it's a psychological level, and as I've said, psychological levels provide support and resistance. In this case, it's resistance. So I don't want the bulls to push up here, meet resistance, or in other words, sellers, and then get pushed back down to my entry or even to my stop loss. I don't want that to happen. So if the bulls push up to my psychological level, I'm going to take some profit, and I'm probably going to move my stop loss to break even at that point. So my first target is the 1.0200, and that's about a 60 pip gain if that target's hit. My second target is a little higher than that. It's up here at the 1.0260 level. This target is definitely not set in stone. If price comes up here, I might let it run a little longer if price seems strong, or if price is weak when it's inside this area of resistance up here, this massive area of resistance, I might exit inside this area of resistance. So this target's not set in stone. After my first target's hit, I'm going to try and monitor price and decide based on the price action where I'm going to exit. Okay, so stop loss. Stop loss is a little tough on this trade because ideally I'd want to place my stop loss somewhere like down here. I'd want to place my stop loss down here because it's below the low of the indecision candle. So the bears haven't been able to push this low in quite a while. So it's going to be really hard for the bears to hit this low. And if they do hit that low, that indicates that the bears are really strong and they have a lot of power, and that my bullish trade is probably not going to happen. So ideally I want to place my stop loss down here, but the problem is that stop loss is a little too large. I mean, my first target's 60 pips, my second target's roughly 120 pips. So that's going to make my stop loss almost equal to my first target. Sometimes you have to weigh the dangers of having a tight stop versus the dangers of having a loose stop. And in this case, I'd rather have the tight stop because I think the loose stop is too dangerous. So my stop loss is going to be up here. The stop loss is roughly at the 1.0110 level. So that makes it a 40 pip stop loss with a 60 pip target. And the 60 pips is only my first target, 120 pips for the second target. So I'll update as this trade progresses. Okay guys, just a quick update to this trade. It is now Friday the 13th, 16:54 GMT plus 1, which makes it roughly, off the top of my head, 18 hours since I shot the first part of this video, give or take an hour or two. So I wasn't able to update this video in between because I don't normally trade Friday, so I had quite a busy day today and I just didn't have time to update on this trade. So I'll explain now exactly what's happened. Let me zoom in a little bit here. As you can see, I'm still in this trade. So I've still got 2 lots in. I've closed out 3 lots. I closed out 3 lots at the first target, which I'm sure you remember was up here at the 1.0200. So the first target was hit, closed out 3 lots there. And then the price started pushing up to my second target, which was around about up here somewhere. So the price started pushing up there. It's not quite made it. It stopped here in the center of this resistance area, which is quite normal. And if this was Wednesday or something, I wouldn't mind keeping this trade open and letting it at least attempt to break out into this area and hit my second target. Unfortunately, today is Friday, and if we switch over to the Forex Noobs clock real quick, we can see that the market closes in roughly 5 hours and 3 minutes. So that means it's Friday evening. Like I said, it's almost 5 p.m. over here. So I'm just going to close the rest of this trade out now. I think it's important to take a break from trading every weekend, and my weekend usually starts at 5 p.m. on Friday evening, so I'm just going to close this trade out now. I mean, it's above my first target. It's not quite hit my second target, but really there's 5 hours left to the day. It could very well push up and hit my second target, but I'm not going to stick around for another 5 hours watching the charts on a Friday evening, so I'm just going to close this trade out. We're 10 pips above the first target, so okay, so the trade's closed out, and you should stick around because a lot of cool price action stuff happened during this trade. There was a point where I was almost on the verge of exiting this trade not too long ago, around about up here. So there's a lot of cool things that happen with this trade in terms of price action, and I'll be explaining that stuff now. Okay, so the reason this trade was so easy is because of my use of support and resistance. I used the support area to spot this reversal and a resistance area for my target. So the most important part of this trade is the support down here and the resistance up here. So a support area is a buy area. It's full of buyers, or in other words, bulls. A resistance area is a sell area, which is an area full of bears or sellers. I knew bulls were grouped here because this support area has acted as both support and resistance in the past. So I knew there were bulls, buyers, grouped down here, waiting to push the price up, waiting to go long. This is useful because it allowed me to prepare for this trade well in advance. I knew 12 hours before I entered that price was coming down here and that I should watch out for a trade. So when price finally hit this support area, I started seeing signs of indecision. See how it went from a strong bearish trend, a bunch of candles with large bearish bodies, to this candle here, a candle with a long lower wick and a small bullish body. This candle here tells us that the bears tried to push down. We can see that because of the lower wick, but the bulls were too strong. The bulls reversed that move and pushed them back up. That's a sign of indecision. As soon as I saw this candle, I was prepared to enter a bullish reversal trade. To me, this was a clear sign that buyers are entering the market. So I set my entry at the psych level, and when the psych level broke, it indicated to me that the bulls were in fact strong enough to continue the move up, so I entered the trade. Now this trade did not go as smoothly as most. Around here we ran into some trouble, but to be honest, I wasn't too surprised. This level has acted as minor support and resistance in the past. You can see that from these bounces over here. What was worrying is that we got a clear sign of indecision here. So remember the logic I used to enter this trade? Indecision forming on support. Well, here we have indecision forming on resistance. That is a sign that the bears might take control. The good thing was that this resistance was just minor. The major resistance is marked out by the dotted grey lines here. So this area here is just minor resistance. However, even though it's only minor resistance, I did move my stop loss to break even when I saw this indecision candle here, because at the end of the day, I've entered the trade because I've got an indecision candle on support. So if in the middle of my trade I see indecision forming on resistance, well, I really only have two options: jump out of the trade or move my stop loss to break even. Anytime you look at a chart, you need to read the price action. So when I entered this trade, I read the price action, and it told me that the bulls were going to take control of the market. At this point here, I read the price action and it suggested that the bears might take control. So I needed to prepare just in case the bears actually did take control. So that's why I moved my stop loss to break even. I wasn't sure if the bears would gain control or if the bulls would retain control. So I was preparing for the worst case scenario, but I wasn't overreacting by exiting the trade right here. So luckily the bears did not have the strength to take control of price and continue to push up. As you can see, it stalled here on top of this resistance area, and that proves that this resistance area is accurate and that I had a good target. The trade was closed with around about 60 pips profit. So combined, I probably spent 30 minutes analyzing this setup, entering it, managing it, and eventually exiting it. So 60 pips for 30 minutes of work is not a bad payday. So I hope you enjoyed this video and I hope you learned something useful. If you want to learn more about how I trade and if you want to start taking these kinds of trades yourself, click the link below and check out my advanced course.